Pleased today to host Zayn Kalyan, the CEO and director of Scorpio Gold. In the last 3-4 months, they've released 7 press releases averaging 33 meters of 1.13 grams per ton. It feels like we're making progress. Let's hear the story.
Great. Thank you, John, and happy to be here again and have the opportunity to present. So as you kind of highlighted, we've had a lot of progress over the last year. Really been working towards our ultimate goal of building out our resource towards 2 million ounces from the 740,000 ounces we sit at today. For those who are maybe not that familiar with the Scorpio story, I'll just give a general overview. Located in south central Nevada, 10 miles south of Round Mountain, which is the largest mine in southern Nevada. Kinross is 20 million ounce historic producer. We're fully financed for a 50,000 meter drill program, and we kind of mark that 50,000 meters starting October 2025 to October 2026. Since we've taken over the project at the beginning of 2024, we've drilled 18,000 meters. I correct myself there. Since May of 2025, we've drilled 18,000 meters. So almost last year, we've drilled 18,000 meters. Ultimately, with the goal of scaling our 740,000 ounce resource at 1.26 grams per ton, which is double the average grade for an open pit constrained resource in Nevada, to 2 million ounces by the end of this year. And ultimately, we have a lot of conviction that this is a much larger system, 3 to 5 million ounces being our ultimate target. And we have a lot of data and a lot of promising results that we put out over the last year to support that goal, which I'll talk about here in a minute. Company is fully financed to execute on that plan between now and the end of the year. We are fortunate to have the support of Ross Beatty and Eric Sprott, who participated in a strategic financing in September of last year, alongside the sale of our past producing asset that was functionally mined out Mineral Ridge. And then finally, one of the things that maybe has changed significantly since the last time I was here to present is we have gotten through a fairly significant warrant overhang. We had 40 million warrants at 20 cents that all were exercised ahead of the expiry date in February of this year, February 23rd of this year. So we are now in a position where that overhang is gone. Our cap table is significantly cleaner, and we're actually lined up in a position where I hope in the coming weeks and months we'll be able to kind of indicate to the market a little bit more timing on our forthcoming NASDAQ cross list, which I think to your audience, a lot of whom are based in the US, should be of particular interest, just giving greater access to the ability to invest in Scorpio, and also providing the company with a greater liquidity profile. There's very few companies of our size with a US asset, 100 million market cap roughly size, that trade on a US primary exchange. And I think that in this current climate, hopefully we're kind of have gotten through a little bit of the volatility of the last couple weeks. But in this particular climate, there is significant retail demand for junior gold exploration projects, and there's very little supply on the US primary exchanges. So we feel that there's a great opportunity for the company to get more exposure that way. And we've been working on the NASDAQ listing since October of last year, and we're nearly there. So core goals over the next 12 months, ultimately building from that 740,000 ounces to 2 million ounces with the 50,000 meters of drilling. As John highlighted, we have been very consistent in putting out news since the beginning of the year. I think we've averaged pretty much a press release every 2 weeks from drill results. We have 3 drills out in the field right now, 3 diamond drills, and we're going to continue that cadence. We typically get results back from our lab every 7 to 10 days. And with that, we're able to deliver results very consistently to the market, and we're going to continue to do that. Alongside that, we are working on a modern met study. The metallurgy of this project is very well understood. It was mined by Echo Bay till 1991. The high grade part of the resource on the underground was actually mined in the early 2000s, 2008, 2009. The most recent met work was done by Kappas Cassidy, a prolific Nevada lab, in 2012. So the metallurgy is by no means a fatal flaw, but because of the historic separate ownership of the project, which is ultimately the reason that Scorpio has this project, it was able to consolidate the ground. has resulted in a situation where there is no consolidated flow sheet for the different stages of mineralization throughout the project, from the high grade, the different types of ore types on the low grade side of the resource to the different types of ore types on the high grade. So we are in the process of putting together an updated flow sheet that looks at the project as a whole. We fully expect that that flow sheet will include a component of heap leaching, so first primary cyanide, as well as kind of ending with a final pass of a full mill circuit, and being able to achieve that 90+% with a high 70% from the first pass with heap leaching. And then all of this culminating in working towards putting out an updated resource at the end of this year. We are very confident in that 2 million ounce number as our target, which more than doubles our current resource. With a core goal of trying to maintain that gram per ton plus average grade. I think, as John, as you highlighted, we've been able to show a lot of consistency with the drill results that we put out over the last, call it probably 6 months. And we're going to continue. We're going to work to continue that cadence. And even I think we've hit our stride with understanding the structure, been able to deliver more consistent drill results, been able to target more efficiently. And the results we actually put out this morning on Black Mammoth, which I'll talk about here in a minute, are very exciting. And we're very excited about the opportunity with Black Mammoth as a completely new zone on the edge of the highest grade part of our resource. It's a 250-meter step out. You can actually see it here in this picture here. It's basically this big jasperoid ridge that sits right at the edge of the historic underground. You can see the portal right here, but I'll show a better image in a minute. But Black Mammoth is our first major step out from the core resource envelope, and ultimately we think it presents a very exciting target. And we were able to hit mineralization in the first 2 holes, continuous mineralization in the first 2 holes. And we have an additional 4 more holes currently, 2 or 1 of which has already been drilled, that are in the pipeline here that are immediate targets for us. Just to kind of go over the share structure briefly. So today we're sitting at about 300 million shares outstanding, 337 fully diluted. We do concede it is a fairly large structure, but at the same time we are fully financed for the rest of the year. Ahead of the NASDAQ listing, and assuming that we're in a better climate, we're definitely not comfortable raising money at today's market cap, and we don't need to. But with continued success with the drill bit, hopefully a little bit more tailwind in the gold market, I think our ultimate goal is to do a raise at some time later this year. And on the back of that, increase our drill program to have 5 drills out there. I'd like to say that by the end of the year, we're in a position where we're putting out that updated tech report with the 2 million ounce target, and then alongside that, having 5 drills going and being well on our way to building towards 3 million ounces. Just to kind of briefly go over the history of the project. Historically, Scorpio had owned the Blue Ground here, which is the historic Gold Wedge mine. It still remains a fully permitted gravity mill with a fully permitted underground, which has some value for a number of reasons of de-risking, which I'll talk about in a minute. And then alongside that, Scorpio was able to consolidate the core ground that basically represents the resource, which is this green ground, which was acquired from Kinross in 2021. Scorpio was the benefit of Kinross looking to divest of non-core assets post the purchase of Great Bear in 2021. And that resulted in Scorpio being able to consolidate the district. Scorpio and Kinross had gone back and forth with each other to try and acquire each other's projects over 10 years. You can see that the resource basically sits right on the property boundary between the 2 projects. So you really did need both to make it work. So ultimately, Scorpio got the benefit of that, and that's put us in a position where we're ultimately working towards building a much larger district scale resource, and then ultimately working to set this project up to go into production. Kinross does retain a 2% NSR on the green ground here. Round Mountain, which sits 10 miles to the north, is at the end of its mine life. It is in a position where you can see here the map, they are in a position where they don't have enough ore to fill their entire processing capacity. They have a roughly 13,000 ton per day mill that they've recently extended the mine life from 2030 to 2038 with 1.4 million ounces of underground. But with that, they won't have enough ore to fill that entire mill. So Scorpio is the largest opportunity, largest scale resource located closest to Round Mountain, so there is a lot of potential there. Kinross has begun doing further step out exploration outside the mine gate, even as close as our property boundary. So we do see a lot of potential and synergy there. We've recently been able to give Kinross a site tour of our project. They have an interest already with the NSR on half the resource. So logically, there is some synergy there. But that said, I think when we started this project, we always felt Kinross was the logical buyer. As we've worked through this project, we see so much standalone potential with the scale of what we're building that Kinross is not the only buyer. We've had a number of conversations with mid-tiers and majors over the last 6-8 weeks, continuing to kind of just educate these parties who are interested in projects in Nevada of our size and scalability potential of the opportunity. I think at this point, we're not really in a position where we're ready to tie ourselves to any one party. But we will continue to have those discussions. And ultimately, our goal as a company is to sell this project, basically package it up, de-risk it in every possible respect. We're following a very tried and true model. Maybe here I'll briefly talk about the team. So I am obviously a fairly young CEO, but my partner in this deal, Leo Hathaway, who worked with Ross Beatty for 25 years, or 22 years. Leo sold 10 plus companies with the Lumina Group. They follow the same tried and true model of functionally building large inferred resources, showing the scalability potential, de-risking it as much as you possibly can from an engineering, permitting, environmental standpoint, and then an economic standpoint for that matter, and really just packaging it up for a mid-tier major to then take it through to production. Harrison Pokrand, our VPX, has worked at B2 Gold for nearly 10 years as well, prior to joining Scorpio. A lot of exploration experience globally, and Harrison and myself were really instrumental in putting the entire opportunity together. Leo joining a little bit later, but Leo's been very committed to the project and ultimately has added a lot of value from a technical standpoint. Charles Funk, who is a mentor of myself. Charles is the CEO of Heliostar Metals. Charles has been a great asset. He was very early in recognizing the opportunity with Scorpio and really pushed us to take this on. Daniel Coons, who is the former CEO of Ivanhoe Mines. Daniel, again, was very early in realizing the opportunity with the Manhattan project and really helped us validate the reasons for taking over Scorpio and ultimately driving us to where we are today. So maybe just to talk a little bit how the resource stacks up amongst its peers. That 1.26 grams per ton is really critical when you combine that with the recovery, the historic recovery numbers. So 90+% recovery from full mill circuit, high 70s from first pass cyanide / gravity. Those two things combined really do put the project in a very unique spot compared to other open pit resources in Nevada. We think it's a key differentiator, especially if you're trying to value a company on a per ounce in the ground basis. I think you can arguably say that today, the average Nevada explorer is probably trading at somewhere between $100 and $150, is or should be trading at about $100 to $150 US per ounce in the ground. Maybe some companies are a little bit less than that. Some companies are a little bit more, depending on a number of other factors, including management team and access to capital. But all that said, we feel that those numbers often discount grade. A lot of those companies are sub a gram per ton grade and average grade. The fact that we're that 1.26 gram per ton average grade does make us very unique amongst other resources of our stage in Nevada. And being able to maintain that as we grow our resource towards 2 million ounces, scale being the one thing that we're lacking compared to our peers, is going to be really critical. And that's something that we're actively working towards this year. If you maybe just kind of do the back of the envelope math, if you assume a $200 US in the ground per ounce in the ground basis, we're still significantly undervalued in where we're sitting today. And ultimately, if we are able to achieve that 2 million ounce target by the end of this year, we're even more further undervalued, and there's a lot more blue sky for our market cap and for investors, especially considering that given the fact we are fully financed to achieve that 2 million ounce target, from our perspective, then there's no dilution risk in that upside. or potential upside. How do we get to 2 million ounces? So the core resource exists functionally in this area right here. This is a 1.8 kilometer zone. And as we showed on the previous map, this is basically the functional resource. Outside of that resource, or sorry, inside this resource, there's 400,000 ounces of uncategorized blocks that we were unable to include in the maiden MRE, and that was primarily due to the fact that the drill spacing was too wide, as well as some QA/QC with historic drilling. We are upgrading those 400,000 ounces as we speak. We've been drilling those over the last 6 months. So we have one of our 3 drills is focused on effectively updating ounces in what we call the Reliance trend. We put out a hole, it was 5 grams over 5+ grams over 39 meters. We put that out about a month ago. That hole was actually in the core Reliance zone. It was actually upgrading some of those 400,000 ounces at a higher grade than we'd originally projected. And we're going to continue to kind of drill that Reliance zone. We actually put out some results from the Reliance today as well, alongside that those Black Mammoth holes. Outside of the Reliance and the core resource zone, you have an 8.5 kilometer fully mineralized district, which is represented by this whole zone here, and you have 5 historic resources, 1, 2, 3, 4, 5, that collectively are 300,000 ounces at 7.9 grams per ton. Now, these are historic resources. They're modeling veins, not open pit constrained. That 7.9 grams per ton we estimate is fully overestimated, and it is not representative of the true grade you're going to get. But they are assuming a 3 gram cutoff in those resources as well, whereas we're using a 0.3 cutoff grade in our MRE. So ultimately, you can kind of see the scalability potential along strike from this 1.8 kilometer zone that you have in the middle here to a full 8.5 kilometer district level zone with historic drilling and resources all along this entire mineralized trend and even to the outside of it. You have 2 past producing pits down here in the bottom of Keystone and Jumbo. April Fools is a past producing underground mine. Black Mammoth has a historic resource, but it was a historic mine that was mined at the turn of the 19th century. And then Hooligan is also a historic underground mine. All of these red dots you see on this map are past producing projects. All of these black dots you see are historic mine workings. So it's one of the tightest density of historic mine workings in Nevada that's remains undeveloped. And that's primarily modernly undeveloped. And that's primarily due to the fact that the ground had never been consolidated under one owner. Black Mammoth is so there's 2, we have one, as I said, we have one drill focused on the Reliance trend. We have one drill focused on the Zanzibar trend, which is a step out of the main resource. And I do apologize, but I'm just gonna have to bring up I'll bring up a little map here. So the Zanzibar trend is an area that exists outside the main zone of the Reliance trend. It's effectively connecting Mustang Hill to the Gap Zone, which is the historic property boundary. And it's a 300-meter untested zone. We hit a 3.14 intercept, 3.14 grams over 49 meters intercept. This was roughly just under a month ago. And we've been continually drilling this structure. And ultimately, we feel that this structure has a 200,000 to 300,000 ounce potential, and potentially even more than that. And if we can maintain that content or show that the growth of that resource, these are very additive ounces. It's a zone that's never been drilled. There's a lot of historic workings across it, which I'll show in a minute. That's not only very additive to the resource, but it's also potentially very additive to the resource at a high grade. And that's really key to our goals. And ultimately, if we can deliver ounces at 2 gram plus per ton, that helps maintain our average grade across the entire resource as we add more ounces, potentially lower grade towards the south. Zanzibar, we have one drill working here, and it'll be busy over the next, call it 6 to 8 weeks, continually drilling holes. We have some holes here in the lab already. We recently shipped nearly 6 holes to the lab on Friday of last week. And typically, as I said, we're getting results back in 7 to 10 days. So there's lots of drill results forthcoming and continuing to deliver catalysts to the market. So I'll take a minute here just to give a little bit of an overview from scale potential. So as we showed the map kind of showing plan view, showing how big this opportunity is, this 8.5 kilometer structure. But when you actually see it visually, it does help kind of show the scale of it. When we started this project, the ultimate opportunity was presented to us from seeing that you have 1, 2, 3, 4 historic pits all along the same structure. You have 2 historic pits at the end here, and then you have a high-grade underground mine that remains fully permitted. And then you have this Black Mammoth target that's never been drilled modernly and never been explored properly. And when you kind of look at that, you have this whole Reliance trend that has this real district scale potential. You turn around, you have Hooligan, which again, historic mine, all along the same strike length. The Caldera margin functionally is right here. You have these structures that are coming right up against the Caldera margin, and you have fluid. It's basically a great zone for fluids to come up to the surface. And then at the end, you're looking at Round Mountain, which is a 20 million ounce mine out here in the distance. You can really see that this is a prolific district, a lot of potential for mineralization, and ultimately that 3 to 5 million ounce number is kind of our target. And these are the primary drivers of this from a geologic perspective. Let's talk about Black Mammoth for a little bit here. As I said, this is a black jasperoid ridge. It's never been drilled modernly. We put out the results, another set of results from today. That was go ahead, John.
Jasperoid is Nevada slang for surface alteration. It means these siliceous epithermal fluids already touch that rock and it's visible from surface.
Appreciate that.
Some of us haven't been hanging around Nevada.
No, I appreciate that. And maybe I'll actually show, I have a good, from the press release today, I have a good image here. So this shows that same ridge we were just looking at. You can see the first hole that we drilled 53, which hit 0.7 grams over 24 meters. You can see it kind of drilled from the back there this way. And then hole 57 was the hole we put out today, and that was a 1 gram over 40 meters, 1.02 over 40 meters. And you can see these are all right up against where this ridge reaches the Caldera margin. But at the top of this ridge, historically,
Caldera is a collapsed volcanic chimney.
Collapsed volcano, yeah. And typically in Nevada, you see these mines kind of come up and continue, or there's a continuous trend from from south to north, or north to south, however you want to look at it, of these calderas that have built over the years and years from the southern end of Nevada to the south, to the north. And in those calderas, you have these events where these mines have popped up. Round Mountain being one of them, just 10 miles to the north of this, and us being on the other end of another caldera with Manhattan. At the top of this ridge, historically, they were pulling, there's a 68,000 ppm sample right here. There was multiple gram samples across this, but just speaking about the fact that this is it's a very exciting target because it's never been drilled, but it sits right at the edge of the highest grade part of our resource, which is this Gold Wedge Underground. When you look at it, the Gold Wedge Underground basically runs, from the portal, which exists right here, to about here, and it never drove into the ridge. Now, there's an interesting opportunity from an exploration perspective where we've already planned holes to be able to drill the Black Mammoth target from underground, and that's things that we're working on right now because our underground does remain fully permitted. And then 2 is from a development standpoint. For a mid-tier major who's going to take this through to development, and in us building our development plan, we are looking at potential for there to be a scenario where you would drive the existing underground into the Black Mammoth Ridge, and that could be your startup mine where you don't have to do a lot of permitting or almost no permitting to be able to begin mining because it already remains permitted. All the while you're doing all of the permitting work that you need to do to basically build your big mega pit, which is ultimately what the resource contemplates. Again, I'll just show the scale here. This is the historic West Pit. Again, one of the reasons that this project exists is because the bulk of the resource functionally exists right in here. The Kinross, who is the owner of this West Pit, was never able to lay back this West Pit into this resource because the property boundary was right here. So Scorpio owned everything on this side and Kinross owned everything on this side. We've been able to consolidate the entire thing. You can see here on this side, you have the Zanzibar trend, which is the another target area that we're drilling. This is that 200,000 to 300,000 ounce target that we think has significant potential. That basically extends from here to here. The drill hole that we put out, that was that 3 grams over 49 meters, was roughly right here. And we've,
Is
again,
that a public road in between the deposits?
it is. It's a state road. Yeah. And we've already begun the work to permit moving this road up behind in here and then coming down into town. The actual road, the road ends, or the Nevada County, or the state road actually ends right here. So it only needs to be able to maintain up into that point. And basically we have a plan to move it around the back. In Nevada, you can move roads. There's multiple mining projects in the state right now that are already moving state roads. And probably the most recent large-scale project was about an hour south of here, which was the Centerra project at Goldfield, the Gemfield project that Waterton moved about 7 years ago. So there is the ability to move roads is there, as long as obviously you have the time and money. And it is work that we're doing already now, getting the baseline work done. So this is packaged up well to be taken into development. Yeah. What else can I say? I've talked a lot about the scalability potential of this resource along strike, but I haven't talked a lot about the potential at depth. So the current resource bottoms out at 200 meters. We have confirmed mineralization as deep as 350 meters below that, or so 150 meters below the existing resource. Some of the holes that we have drilled this year have continued to be additive at depth. That is another expansion potential. So you have a resource that bottoms out functionally here at 200 meters. And this is all along that 1.8 kilometers of strike in the middle of the resource. Ultimately, there's a lot of potential to expand at depth as well. The fact that our mineralization remains amenable to cyanide even in the sulfides. You can see this is a thin section from the bottom of the west pit below the sulfide horizon. You still have that disassociation with pyrite and the non-encapsulation, making it amenable to cyanide and being free milling. So ultimately, even when you get below that sulfide horizon, you still have good metallurgy, and we feel very confident in that. Yeah, I've talked a lot about the project as a whole from an infrastructure perspective. Thank you, John, for bringing up that road. We're very focused on de-risking this in every way we possibly can from a permitting standpoint. The fact that we have the existing mill does afford us one very valuable piece of infrastructure, which is water rights. Water rights can kill a project in Nevada, and they have in many cases over the last 10 years. Water is becoming increasingly scarce, I'm sure many people are aware of. We have enough water to support a 6,000 ton per day mill. And that water has been established over years and years and years. We are one of only 2 companies in this basin that hold water rights, us and Kinross. So it's a key factor, especially when we start talking to mid-tiers and majors in a more integral, from a more integral perspective. That is a major checkbox, and it also helps from a time perspective and viability perspective. The 400 ton per day mill that we do have is way too small for the ultimate opportunity that we see here. We are in the process of selling the mill equipment. Ultimately, we see more value of this building that you see on the picture here as a core shack and core processing facility. That said, things change, and we're currently evaluating a bunch of different opportunities on that front. Yeah, I really appreciate the time. I'm happy to answer any questions you have, John, and we can kind of step through it.
So your slide number 11 of recent drill intercepts interested me. And I sent it to a buddy of mine in Kirkland Lake that's working on another project in Idaho and in Nevada and Eastern Canada. Now, is it okay if I ask you the questions that my buddy asked?
Of course.
This is Mike Sutton. He found the South Mine Complex at Macassa and likes to fish on Kirkland Lake.
Okay, nice, beautiful.
So Mike looked at your slides and in your deck, and he asked how much of the deposit needs flotation or would have something like a 77% heap leach recovery without the flotation. And I guess on your grades, the 77% recovery would leave a 0.3 gram tail, which is
Yeah.
almost good enough for heap leach raw ore these days.
Yeah. Yeah, I think this is work that we're doing right now is kind of doing that met work across the project. The historic heap leach that was on this mine, can probably show it on a map actually. It kind of sits basically right here. Oh, sorry, down here. That heap leach was one of the first heap leaches in Nevada. It was in the early '80s that they built it. And our understanding is it was basically they were actually taking the tails from the mill and putting them on that pad. And they had, because they built a mill originally, and then they were using basically low grade milled material, putting that on the heap leach, and then running the high grade through the back end, which was the CIL. Today, like for me to break down the percentages as to what would ultimately go into first pass versus what would go on the heap leach, I think it's a little bit early. That is something that we're working towards, getting that data all lined up towards the end of the year. But I would roughly say that, call it 75% of the resource already is very amenable to cyanide, and will return that, call it high 75 plus percentage from heap leaching, just given our understanding of the ore types that are there today.
My friend noted that your drill intercepts are, he called them bottom heavy, where the grades are higher at the bottom of the hole than the beginning of the intercept.
Mm-hmm.
And he thought that your production profile might be a little bit lower at the beginning years and higher in the later years if the grade is improving as you get deeper. Is that a fair answer?
Yeah, the one thing I'd say there, like if you look at this here, you can kind of see. I would, like, there is a fair amount of cover. It's not like we're talking about like 50 feet of cover here before you get into the mineralization. But you are right there. It is at depth, like this being kind of the 50 feet here of cover right to the edge of the west pit. But the fact that you're laying back this west pit into that zone, from a development standpoint, I think you could actually target you could easily target some of this high grade zones immediately and just basically pull that out. So, and again, none of this is below 200 meters. So it's all functionally from surface. There's not a huge amount of cover. Your development profile is not very high. So yeah, you're probably going to, obviously, as you go through, you're going to end up getting higher grade, but you do have these pockets of high grade in these areas, and you don't have a ton of cover. Like, you're not talking about a huge amount of depth here. So, I think it really just would be what the production profile and what the mine plan looks like at the time you kind of get there.
On the Suma deposit, he was guessing the strip would be 3.3 to 1.
That sounds about right. So the average across the entire project is 4 to 1, based on the current MRE.
Now, in the drill holes that you've been releasing since December, which of them are confirmatory within the 740,000 ounce existing resource? That's the slide that I wanted my buddy to look at. And we're trying to raise money for a Canadian $10 million cap project in Idaho.
Okay.
And your intercepts look just like its intercepts.
Yeah.
Which is why I wrote to my friend. But which of the holes are in the existing resource confirmatory versus the 258,000 ounce historic resource to be verified and included later, versus step out holes like Black Mammoth this morning?
Yeah. So anything you see that's Reliance trend, all of the Reliance trend are all typically inside that core resource envelope and are basically adding blocks or confirming blocks that were in the resource, but we're the drill spacing was too wide to include, and they're the confirmatory holes. So
from code, how can we identify which are Reliance trend?
Typically, they're all noted in the. Here, I'll show you this
Looking
one.
at slide 10.
Yeah, on slide 10, it's not great because this isn't a great slide because they're not labeled, and maybe we should update that. But typically when we put out results, you can always see here, it'll show the target, and you can see one of our release tables here. So it'll show West Pit, Stray Dog, Reliance Trend, Stray Dog. All of these holes are in the core resource envelope, and these are all confirmatory. Or some minor step out, but Reliance Trend is typically all confirmatory, or West Pit. And that's all in this main area right here. And this was actually one of our better intercepts that we've put out. Probably arguably our best intercept that we've ever put out was sorry, not this one. It was go back. Where's that 39-meter hole? Doesn't actually appear to be here.
So Adrian Day asks a question.
Yep.
Other than Ross and Eric, are your shareholders primarily retail or institutional?
Primarily retail. We have, obviously, Adrian is a great supporter and been very involved from the very beginning. He's probably one of our only institutions that's participated in any of our financings. Recently, we have been making a concerted effort to build our institutional base. I think we've kind of appeared more on the institutional radar as we've built out our resource, gotten north of 100 million market cap. All of those things combined have definitely made us more attractive to institutions. We're making a very strong effort to market to more, call it, funds. I think one of the issues that we have right now is that we haven't done a financing since September of last year. So as we've grown, there haven't been many opportunities for some of these institutions to be able to get meaningful positions of size. I think as we work towards doing a financing later this year, that opportunity will present itself. But no, for the most part, we've been very fortunate to have a core group of roughly 30 shareholders who financed this company through since the beginning of 2024 when we restructured and took over Scorpio. Those same 30 shareholders have participated in nearly every financing we've done, or they have, and they've remained very committed to the ultimate opportunity. So we're very fortunate to have them. We've never done any kind of wide brokered round. So we do have a lot of retail shareholders, but those retail shareholders are typically high net worth mining investors and individuals who do hold this. It would be very easy for me to put my finger on roughly 60 to 70% of the shares today, directly with direct contact with those shareholders.
Everyone's welcome to submit questions via the question box, and there's a little green icon at the bottom of it that says submit a question. The format of the software changed in the last several months. When you get the next resource update, how much longer will it take after the resource calculation to have a PEA?
So we're doing a lot of the baseline input work that's necessary to do the PEA today, like that stuff that's ongoing right now. I would say that it's probably a 6-month process from the day that we get that MRE updated. Especially because we'll have the modern network done and the full flow sheet and all that kind of put together.
So when you have the PEA in hand, will there be one cash register for heap leach or 2 cash registers, a heap leach and a mill stream?
It'll be 2. It'll be a heap leach and a mill stream.
How many tons per day range guess do you think each will be?
I don't know on the heap leach, but I can tell you on the mill, it's roughly would be about a 6,000 ton per day mill. Now, the only caveat I'll put there is we have a little bit of, I don't want to say, we're going to have all the input work, but we don't necessarily want to do PEA if we're confident this thing is going to get further north of 3 million ounces. Like we're going to work towards 2. We're going to have a blind sight on being able to continue to drill towards 3 in 2027. How far it gets beyond that will kind of, and what our line sight to that further blue sky looks like will determine the timing on the PEA. And that's primarily just driven by the fact we don't want to do a PEA at 2 million ounces and then have to redo a PEA at 3.5 or 4 million ounces.
So if you have 2 cash registers going and some infrastructure in hand, is $500 million US a guess for what the capital might be?
I think it's somewhere between 300 and $500 million probably in there. And that would probably scale based on how big the resource ends up getting. But and then maybe do a thumb suck on 100 to 150,000 ounces a year.
Once again, any questions from the audience, please? So the news flow is probably going to be drill holes with assays every 1 or 2 months. And then sometime after mid-year, a resource, and after 6 months later, a PEA. And usually the QPs take longer rather than being faster. And the assays take longer rather than being faster. Is that the nature of the beast?
Yeah, what I'd say is the assay. We have a lot of benefit. We've been very fortunate to have very quick assay turnaround time. So our ability to work towards getting that updated resource is pretty good. We're as I mentioned to you, John, before we started, we were already talking to our resource modeler about getting a call it baseline update done, based on the holes we have thus far, the 18,000 meters that we've done thus far. So yeah, like I think end of the year is a reasonable target. The met work is, to your point, the met work can be a little bit slower than we anticipate sometimes, but it is stuff that's being done and we are working through it. Yeah, I would say December 2026, January 27 is our target for the next update.
Super. Well, if there's no more questions from the audience, I think we've had a pretty good update. And congratulations. I'm happy for your progress. My only big surprise is your share price is exactly what it was in December, despite all these good holes you released.
It's frustrating. We had a 52-week high at 64 cents Canadian about a month and a half ago. Obviously the stocks come back off. It is frustrating. I think we had a lot of tailwind, and then the gold kind of fell off. And I think hopefully with this run back, we're going to be in a place where things will clean up and we'll be ready to go.
Well, we're all coming back now, so we can breathe easier the last 2 weeks.
Exactly.
Thank you very much, and good luck. Happy hunting.
Thank you, John. Really appreciate the opportunity. Thanks.